you got to invest. You're not going to save your way to success. I get it. I've been there, working as an investment banker 80 hours a week, but investing is really the only way to build financial wealth. Like a W-2 job, taxed at 50%. It's just not going to get you there, right? Real estate has embedded leverage, right? Through mortgages. You got to dedicate some time, educate yourself, find investment opportunities that make sense for you. Welcome to the podcast, Zach. I'm very excited for our conversation today. Cost seg can seem really complex to many investors. When did you realize this is a game-changing tax approach for real estate investors?
I owned a few investment properties at the time. I went to my CPA. I said, hey, I'm reading about this thing called cost segregation studies. Is it something I should consider doing for myself? My CPA was like, absolutely. Once you figure it out, it's an incredibly valuable tool. You save a lot of money on your taxes and you're able to compound your wealth a lot faster.
I've read that you guys have done over 2,500 cost seg studies, saved over $250 million in taxes for your clients. Can you just give an example of what a short-term rental investor can expect from their property? Like, what could they actually save?
Yeah, sure thing. So,
welcome to the podcast, Zach. I'm very excited for our conversation today. I'm a firm believer of the cost segregation study. And when it's done right, it's a powerful tool for real estate investors. So why don't we dive right in? Zach, cost seg can seem really complex to many investors. Can you introduce yourself and walk us through how you first discovered the strategy? And then when did you realize this is a game-changing tax approach for real estate investors?
Yeah, sure. Hey, really excited to be here, Michael. Thanks for having me. So I first learned about cost seg actually on Twitter, and I learned about it through the accounts of some of the co-founders of RE Cost Seg, the company that I'm now CEO of. I owned a few investment properties at the time. I went to my CPA. I said, hey, I'm reading about this thing called cost segregation studies. Sounds like it can save real estate investors a lot of money. Is it something I should consider doing for myself? My CPA was like, absolutely. You should definitely get a cost seg study done on your properties. I'm like, okay, why didn't you tell me about this before? Like, you're my CPA. You're supposed to help me, optimize my taxes. And my CPA said, I didn't know that you could do a cost segregation study on residential properties. I thought it was only available to commercial property owners, which is not true at all. But basically, my eyes got opened to the value of cost segregation studies. And there's an expression in real estate investor world that there's two types of people that invest in real estate. People who have heard of cost seg studies and who get a study done on every property that they buy, and people who haven't heard of cost seg studies yet. So once you figure it out, it's an incredibly valuable tool. You save a lot of money on your taxes and you're able to compound your wealth a lot faster.
Yeah, no, we were joking. It's the best couple $1,000s I ever spend whenever I buy a property, especially a short-term rental, because the tax savings are massive. They are certain, and they happen in that tax year, which is pretty incredible. And it doesn't require a bunch of gymnastics that you need to bend over like a pretzel in order to fit through some crazy IRS rule, right? It literally is just, hey, we're going to, do X, Y, and Z, and then you can take advantage of the bonus depreciation. There is, and it's funny, you said that now you're, the co-founders of the company is where you found about real estate cost seg, because actually that was how I found out about real estate cost segs as well. I was following Mitchell's account on Twitter, and I was like, what is this short-term rental loophole, and what is cost seg, and what is bonus depreciation? And, luckily I had some financial background. I was able to kind of figure it out. But that's a big reason why I was really excited to have you on the show, because, I feel a lot of people have heard of it, but there's a lot of mystery around it. And I want to demystify that today. And, if you're listening to this episode, I want you to take action, right? I want you to really dig in and understand how this can be applicable to you or not applicable to you. And any preconceptions you have on costs and risks, really double click on that, because a lot of CPAs are really misinformed about this. They don't want to deal with extra work, and in turn, you are losing money. So please educate yourself, because you could defer your taxes to a great degree. So, do your homework. On the, when your CPA said, I didn't know, I find out a lot actually with CPAs. And maybe I'll kind of ask you a question on that, because there's this misconception that CPAs are there to minimize your taxes. But that's not the case, actually. So maybe just talk about that and, put yourself back in the seat when you weren't the CEO of RE Cost Seg and you didn't know much about this, like how should someone talk to their CPA to really educate themselves on this product and see if it's applicable?
Yeah, I mean, look, I don't want to speak negatively about CPAs at all. We
Of
have,
course not. Of course not.
a national shortage of CPAs. I think we need more of them. The US tax code is incredibly complex, maybe the most complex tax code in the entire world. And so they do not have an easy job. And I'm not trying to speak negatively about CPAs, but the reality is, I think it's important for folks to have a CPA that matches with what their needs are. And in the case of people who are investing in real estate, I think that means having a CPA who's familiar with some of the core strategies to save on taxes if you're a real estate investor. And cost segregation studies are certainly, a major tool in that toolkit. So one of the things we do at RE Cost Seg is, we oftentimes have people come to us. They say, hey, I want to get a cost seg study done, but I don't think my CPA, knows what it is or is going to be able to implement it. We actually keep a list of really great real estate knowledgeable CPA firms that market themselves to clients as like, hey, we are a CPA firm for real estate investors. And so in addition to, our primary business, which is trying to be the leader in providing cost segregation studies, we also regularly make referrals to partners that we have like CPA firms or, other service providers in the real estate investing ecosystem that we think can add value for our clients if they ask us for those.
Right.
We also just regularly interact with our clients' CPAs. We're happy to take calls with our clients' CPAs and walk them through the results of our studies. Or, if there's ever an audit scenario, we provide audit protection with every cost segregation study that we produce. So anytime there's an audit, we're working hand in hand with our clients' CPAs to provide the answers that the IRS needs. But yeah, look, there's a lot of things that CPAs have to know about. It can be very confusing. But what I'll say is cost seg in general is it's not like a risky or out there strategy. This
Right.
is cost segregation studies are a thing that's been happening for a long time. Sophisticated, larger scale, institutional real estate investment firms have been taking advantage of cost segregation studies for a long time. But it's really only recently when companies like RE Cost Seg have brought down the price of getting a cost segregation study done that this really valuable product has been made available to a wider audience of real estate investors, including folks, like myself who are just, smaller investors that own a couple of properties.
Yeah, no, I think that's what, I was very happy to find the firm because, really you guys and some of your peers have democratized access to this tool that most institutional firms and if you're a large developer had access to for decades, but we have not. And especially with short-term rental investors, it's an even bigger advantage, right? Because if you were to cost seg a long-term rental, right, generally speaking, it's it's passive losses. But if you are a short-term rental investor or if you have real estate professional status, then you can utilize those losses against your non-passive income. I think that's the biggest unlock that I've been able to take advantage of. And, again, this is a complex topic, consult with your CPA. But if you have that piece and you understand real estate cost segs and bonus depreciation, right, then that combination is one of the most powerful tax minimization strategies that's available to almost all retail investors. And that just wasn't the case before. And that's why I've been such a big proponent on talking about this because it's just money on the table that's being left behind that most of us or a lot of real estate investors can take advantage of. And back to my original point, obviously not, I don't want to, I'm not speaking poorly of, any profession. It's especially CPAs, it's a very, very difficult job they have. But I had a mentee actually who, I referred to you guys. And she was a very successful real estate professional. And, her CPA, the issue was her CPA understood what a cost seg was, but, felt it was risky, right? And, maybe it was or was not. But I think where I want to educate people is like, ask the questions, right? Maybe it is risky in your case, but, really educate yourself on what it is. And sometimes you have to push back a little bit on, your professional services provider, which is CPA or doctor or anyone, right? Just like ask informed questions. We all have access to, free AI tools now. Like just ask the question and, be able to make a decision, an informed decision for yourself versus just taking someone's word as gospel and moving on, because I found it just to be suboptimal, especially with something as complex as taxes, right? Like you really want to just make sure that you're getting the best advice. And for me, like I switched CPA firms when I really got into short-term rentals in 2020. I had someone doing my taxes when I was an investment banker, and it was, easy W-2 and some K-1s. But, that's also another point too, where if you are doing a lot of real estate investing, like find a CPA that really knows about real estate taxes.
Absolutely.
Like if you have a broken arm, you're not going to go to a brain surgeon, right? And vice versa. If you have a brain issue, you're not going to go to an orthopedist. So really find a specialist that, that can help you with your problem. And that's something, I think a lot of people don't think about. They have, there's a lot of inertia with their CPA, and they just kind of like, okay, well, I know this person to do a good job. But if your situation changes, like you really should think about, finding someone that's an expert in your new situation. And it could be your old CPA, it could be your new CPA, but at least you want to be informed of that. Hey guys, I hope you're enjoying the episode so far. If you can think about how you found this podcast, maybe it was on TikTok or Instagram, or maybe someone shared it with you. I don't run ads for the show or have any sponsorships. So the only way this grows is through word of mouth. If my podcast is valuable for you in any way, please hit the subscribe button and share this with someone who you think would help their investing journey or business. Thanks a lot, and let's continue on with the episode. All right, now back to get off my soapbox about this point, but I've just seen so many people that I've talked to not educated about this product and not educated about taxes. And I just like my mission to make sure that you out there that are listening, like taxes is 50% of your expenses forever. Like learn how to minimize that. That's a great way to compound your net worth.
And to your point, imagine you were a CPA that didn't have a lot of real estate investing clients, and one of your clients came to you and they said, "Hey, I want to take advantage of the short-term rental loophole. Let's say this person is a high income, W-2 earner. Let's say they earn $300,000 a year on a W-2 in California. So their effective tax rate is probably close to 50%. But by buying a short-term rental property, managing it themselves, qualifying for the short-term rental loophole, they're able to take that $300,000 W-2 income down to zero for whatever tax year you're operating in. So they go from having a $150,000 tax bill to getting a really big refund check. That's a massive swing. And so you could even be a CPA and say, oh my gosh, this looks risky. Now, if you're someone like yourself or like us or a CPA that focuses on real estate investors, you're like, no, this is just another day. I mean, we have so many clients that fit almost that exact profile that I just described. And so we don't view it as risky because we see it every day. We know it works. We know it's a very normal thing once people get educated on it and start to implement it. But for someone who's never seen it before, they might go, oh, like it can feel too good to be true. But also it's worth keeping in mind that these incentives were put into the tax code for a reason. These incentives were put into the tax code because they're designed to encourage real estate investment. And that encouraging real estate investment is, I think, one of the components of what makes America really great. Our real estate, if the real estate price gets low enough for whatever type of property, investors will come in. There's incentives for them to do that. They're going to fix it up. They're going to make it, an attractive property for someone to rent or to resell. And having that dynamic real estate economy is, I think, a tremendous asset to the United States.
I absolutely could not agree more. And I think under the new administration, we know who they've put into or who's been nominated for several key roles within, HUD, and they were big proponents of opportunity zones back in 2018. This administration, I think, is going to be very constructive towards just real estate investing it broadly. It's such a big economic driver. People, I've seen numbers, 30% of economic activity is directly or indirectly driven by real estate. It's the easiest, biggest lever any kind of administration could pull to encourage economic growth. And I feel very confident that this administration is going to look at it very closely and understand what drives additional investment, and I think be very constructive around the regulatory legal and the tax landscape to encourage that in the very near term. So I'm excited for that, and I think on that note, first piece of legislation comes up, likely a tax reconciliation bill. And for folks that don't know what that means, this means that it's a special bill that can get through Congress quickly. I'll just leave it there. And a lot of talk about bringing back bonus depreciation. It's currently 60%. We were recording this in December 2024. Likely hopefully back to 100% for longer. It's due to sunset in a few years. Maybe this will sunset over a longer period and maybe permanent. And the holy grail is if it gets retroactive back to 23 and 24. Where it was 80 and 60, now back to 100. That would be obviously fantastic for real estate investors. So I think that's something where if you're listening, bear that in mind too. The current rules are likely to be modified and likely in the near term. So definitely keep your eye on it, and because once that unlocks, people are smart, right? And if rates are steady or go down a little bit, and there's this big tax benefit, real estate prices could appreciate, right? Or likely to appreciate. So there's just a lot of factors at play. And bonus depreciation is a big part of that. And to unlock bonus depreciation, people use cost seg studies, which is really the topic that Zach's an expert about, and I've been fortunate to utilize over the last few years to lower my federal tax liability. Maybe just back to RE cost seg for a moment. I've read that you guys have done over 2,500 cost seg studies, saved over $250 million in taxes for your clients. For my listeners that are real estate investors, can you just give an example of what a short-term rental investor can expect from their property? Like, what can they actually save, right, or defer from the depreciation? Maybe just start with like $1 million property, X land, and then kind of do that math if you don't mind.
Yeah, sure thing. So first off, I'll say that the first step of our process in providing our clients with a cost segregation study is to offer them a free proposal. So you can go to our website, put in a few pieces of information about your property, and our team will deliver to you a free proposal within one business day, which outlines here's how much we would charge you for a study, and then here's the estimated results we think that a study would produce for you. We provide a conservative and an optimistic estimate, and we explain how the process would work and all of that good stuff completely for free. So I encourage everyone to do that. We're happy to analyze your specific situation and give you a free proposal. But going back to your example, so $1 million property, let's say it's not on the coast of California where the land value is going to be really, really high. Let's just say it's somewhere normal like Florida or Texas or the Smoky Mountains or something. And let's assume 20% of the land value. So $1 million property, $200,000 is land. You can't depreciate the land. So you have $800,000 that you could potentially depreciate. We typically see as a first year deduction on single family homes, 20 to 40% of that depreciable value as a year one deduction. With 800,000 of property value, you're looking at $160 to $320,000 as a first year depreciation expense if you get a cost segregation study done. By the way, let's quickly compare that to not getting a cost segregation study done, which would mean you just use straight line depreciation, 1 over 27.5, $30,000 a year. So we're talking about in year one, 160 to 320,000, or in year one, $30,000. So that shows you kind of the core value of a cost seg study is that you're pulling forward a lot of the depreciation. Now, the next question is going to be, does this investor qualify for the short-term rental loophole or not? And that's a question that we encourage folks to talk to their CPA about. My very basic explanation of it to people is, hey, if you're not hiring a third-party property manager and you're going to be the one, doing the majority of the work on your property, the IRS has specific rules. It's called material participation test and a number of hours, and you want to be smart about how you document this stuff. But my simple rule is if you're going to be the main property manager, meaning you're interacting with guests when they request to book, you're coordinating the cleaning people, you don't hire a third party to do that, there's a good chance you would qualify for the short-term rental loophole. And that $160,000 to $320,000 you will be able to use as a deduction against not only any passive income that you have, but also your active or W-2 income. And so by bringing down your active income, you're reducing your tax bill by whatever your effective tax rate is, which can be a really, really powerful and valuable deduction. So going back to that person in California with a 50% tax rate, $160,000 to $320,000 deduction, you're going to save $80,000 to $160,000 on your taxes in year one. And we're going to charge you, a little over $2,000, probably $2,150 for that study. So you're getting like a 40 to 80x return on your $2,000 investment of getting the cost segregation study done. So if someone qualifies for the short-term rental loophole, they can deduct it against active income. If they don't qualify for that, you can still use the depreciation as a deduction against passive income. So we have a lot of clients that take advantage of the short-term rental loophole. We also have a lot of clients who have just steadily built up, either through real estate or other mechanisms, passive income streams. And so these depreciation expenses can generally be used to offset anything that falls into that passive income bucket. So we also have clients who just have built up a real estate portfolio, or maybe they're, a passive owner of small businesses that, produce profits and distributions to the owners every year. Maybe they're an LP in different types of investment vehicles
Exactly.
that produce passive cash flow. So there's lots of ways you can take advantage of it. But the whole name of the game is pay less taxes. The minute you pay $1 in taxes, you're never going to be able to reinvest it or get it back. By keeping those dollars in your pocket, you're able to invest more over the short term, and you're able to compound your wealth faster.
That's a very, very nice way to summarize it. And I think that's just to highlight the short-term rental tax loophole. It's important to self-manage. If you hire a property manager, it's not going to work. Keep really good records. And even if you don't qualify, it's still a passive loss that you can utilize for your other investments. We actually have a number of students in our program that are private equity professionals. And a funny quirk is a lot of them owe big tax liabilities from phantom income from their funds, where they have to pay taxes on income they've earned but not yet received. And this is a great way to offset that tax liability because it's passive. There's passive income that isn't actually received. So
it's like the opposite of real estate investors.
Yeah.
Real estate investors have a bunch of cash showing up, but they don't pay tax on any of it. I guess some folks in the private equity industry have a bunch of, they don't have cash showing up, but they have a bunch of
gains. It sucks. It sucks. And that's how the Blackstones and the Carlyles of the world, handcuff you because, guess how they get liquid. It's like, okay, well then you take you land, on your LP stake or, on your carry. And then that just continues to compound and, you can never leave because of that financial structure. So anyways, this is something kind of, both of us used to live in New York or used to live in New York and have interacted with, people from from those buildings in Midtown. So
Sure.
they have fancy games that they play to incentivize people to do what they want.
Sounds like a different version of golden handcuffs.
Exactly. It's going to handcuffs that you don't actually get to use. It's like 5 years down the line. Look, I mean, if you're getting 20% carry on $1 billion fund, and if you're getting carry on $1 billion fund, a few tears are shed for that. Back to cost segs. When would you not recommend someone? Let me frame it a different way. What situations would a cost seg generally not beneficial to a real estate investor?
Yeah, I mean, look, there are situations where maybe someone is just getting started on their investing journey. They're buying their first long-term rental property. Because of where interest rates are right now, the cash flow after paying the mortgage and taxes is very, very low on that property. And the depreciation that they get from straight line depreciation is more than enough to cover that cash flow. They don't have any other sources of passive income. They're not a real estate professional. They're not using the short-term rental loophole. As a result, there's not really a need for a cost segregation study there. Another example of a scenario where a cost segregation study might not make sense is if someone's owned a property for a long period of time, let's say 10 plus years, they've owned a property. They've already taken straight line depreciation for a number of years. There's just not that much depreciation left in the property. So it might not make sense then. But, oftentimes if someone's bought a property anytime in the last 5, 6, 7 years, if they have, sources of income or the cash flow profile on the property is strong, then a cost seg study generally makes sense. We share this metric with every proposal called the payback ratio, which is basically the cost of the study relative to the projected tax savings if you're able to use the depreciation against something else. And we generally see 9 to 1 as the low end. So generally people are getting 9x whatever they pay us for the cost of the study on the low end in tax savings in the year that they get the study done. And sometimes it's, 20, 30, 40, 50. I've even seen 100, 100 to 1 payback ratio on getting a cost segregation study done. So, once you understand it, generally, most of the time the math checks out. And any depreciation that comes from the cost seg study that you don't use in the tax year where you get the study done just carries over. It carries over to future years. So it's not a use it or lose it deduction. It's a deduction where if you don't use it in the current year, it just carries over to the next.
Yeah, that's a great point. I think it's another common misperception is that if you don't use it that year, but losses carry forward. Is it 20? Is the loss carry forward 20 years or longer?
I don't know that. I think it's indefinite.
Indefinite. Okay. There you go. There you have it. Don't use it this year, then your investments might pay off in a few years, and you can roll that tax loss and offset those capital gains. Again, another kind of important point, right? Like you got to invest. You're not going to save your way to success. And if you are working, like I get it, I've been there, working as an investment banker 80 hours a week, you're fully focused on your clients, you have family, your kids, your spouse, your partner, all these things in life that suck up your time and attention. But investing is really the only way to build financial wealth. Like a W-2 job, taxed at 50%, is just not going to get you there. Saving your money in a high yield savings account, earning 4%, it's just not going to get you there, right? Real estate has embedded leverage, right, through mortgages, or if you're investing in the stock market, if you're investing in private funds, whatever investment vehicle is the right fit for you. I just encourage people to, you got to dedicate some time, educate yourself, find investment opportunities that make sense for you, because of not only that you are going to compound that capital, right, what's going to earn a return for you, but also some of them can provide some meaningful tax benefits, where cost segregation study, bonus depreciation can be a very key component of that. So, again, I think that's a mentality a lot of people fall into. They just put money in their 401k and then call it a day. It's not enough. It's just not enough now.
Yeah, my two favorite things about real estate investing, I guess I have three, but the two properties that real estate investing has that I don't really think exist nearly as much in other asset classes are, one, the amount of leverage you can get on it. And in particular, when you're buying, kind of standard single family home type stuff, the fact that you can lock in a 30-year fixed rate mortgage on today's dollars and your payment just stays the same for the next 30 years is remarkable. I mean, we've felt and seen the effects of inflation recently. I'm pretty sure there's going to be significant inflation between now and 30 years from now. But if you take a mortgage out today, your payment 29 years from today is going to be the same as it is the first time you make a payment. And that's really, really powerful. Being able to access that type of debt and that amount of debt, going back to the person who bought $1 million property and potentially gets a $320,000 tax write-off in year one, they only put $200,000 down probably.
Maybe it could be 100,000. It could be 10% for a second home loan, or 50%.
They could put less than 20% down, right? So I like the leverage and the debt access, and I like the tax benefits. Being able to use that depreciation to offset other forms of income outside of just the income from that property is just such an incredibly powerful tool.
Look, I think it is that in opportunity zones, but this at least is DIY. You actually have control over this investment. This is, in my view, the best tax minimization strategy out there available to normal investors like me and you, right? Or like, if you're part of a big company, a fund, they have access to other things that we don't. But this is really there's nothing really that I've seen that's better than this. You can, if you buy a good short-term rental, it can actually cash flow for you. If you actually generate a positive return, right? You get the appreciation if you bought in a good area, right? You get the tax benefits. You lock in fixed rate long-term debt with no covenants. Like
Yeah.
there's, for folks that
you've got exposure to $1 million asset that's going to, appreciate at some, steady rate, and you only had to put down $100,000 or $200,000 for it.
yeah, I mean,
Which you
coming
get
from Wall
back
Street,
in year one, essentially.
yeah, I mean, coming from Wall Street, 3-to-1 leverage. Like if you had $1 equity, you could borrow 3. That's like kind of standard. 4 if the bank really likes you. Like in real estate, they give you 10, and anyone can get 10. I mean, 5 to 10. Anyone can get 5 to 10. 5 is you put 20% down, right? You put $1 in, and you put $20 in, you borrow 80, right? So if you put 10% down, you put in $1 and get to borrow 9 to buy a $10 asset. These things just don't exist in business. And you get to do this in residential real estate. And you just qualify once. Generally in business, business lending, they ask for your returns every single year. Like you gotta, make sure you earn enough money and have enough reserves and all that fun stuff. Like this is, okay, like you qualify, great. Please make your 360 payments and never talk to us again. Like they don't want to talk to you. In business lending, and that they talk to you, they want to talk to you a lot actually to make sure that you're doing okay. So yeah, I really pay attention. This is not something that it's not easy. You got to find the right market. You got to learn how to operate it. There's definitely steps involved, but I think the payoff is there, right? And if you want something that you actually have control over, that's in your name, that's in real estate, like this is one of the few things. And one thing, just as an aside, I don't like investing in funds is hard. I think it's you have to really know the general partners involved. There's a lot of hype, and you don't control the asset. There's long term sheets. Like you basically don't know what you're really getting into. Most people just like the person that is investing on their behalf and believes that they'll do a good job for them, because there's just so much detail that you're honestly just kind of paying someone to deal with. You write a $50,000 check and you pray you get some distributions, and in 5 years they can refi or sell the property. If you invested in 2019, 2020, yeah, you probably did okay. You invested in 2021, 2022, 2023, like those don't look so good, right? And the fact is, maybe when you invest yourself, it doesn't look that good too, right? Okay, but at least you control what happens, right? Because real estate eventually should do okay. That you want that duration, right? But if it's not in your control, someone else is making a decision for you, and it could be optimal for them, but suboptimal for you. You have no control, and the results kind of speak for themselves. So that's why I'm just such a big proponent of being able to control your own destiny. And what cost segregation studies is just another lever that you can pull to further drive more value for yourself. Because a lot of these fund structures, the tax benefits actually don't accrue to the LPs. Like they divide them up in funky different ways that advantage the GPs. And it's all in the detail that most people, 99% of people don't understand, or even they did.
Don't even know what page to find it on.
They don't know what a tax sharing agreement is. It's great work that you're doing. And actually, I'm curious, how are you've joined Real Estate Cost Seg, after it was launched within the last year. How do you think about growing the business? What's your plan for the business over the next few years?
Yeah, we still think that we have a lot of room to grow. I think of us as an emerging leader in the cost segregation study space. There are, firms out there who have been at it longer than us. We've been around for 3 years, but we're growing quickly. I think we're doing a good job at delivering on our core mission, which is to make cost segregation studies better, faster, and cheaper for more people than they were previously available to. And we're constantly adding products and features. So, this year we launched support for 3115 forms, which is something that you need to file if you've had a property in service for greater than 1 year and already filed taxes on it, but you want to get a cost seg done. We recently launched a refer a friend program to encourage our clients to, connect us with people in their network, which we're very thankful anytime they do. We've invested a lot in our partner program with, folks like yourself and STR like the best and others. And we'll be rolling out, more tools and functionality as time goes on, and continuing to grow the team. This year we did 4,000, just under 4,000 cost segregation studies. I think next year we're
Amazing.
hoping to grow that by around 50%. And really just keep delivering for our clients and saving them money on their taxes.
Look, I appreciate you delivering on my behalf. I have one outstanding cost seg with you in the firm, and a lot of my students and mentees within STR like the best utilize your firm as well. So, we appreciate the great work that you and your team have done for our community. And if you're listening, I highly recommend just understanding the product. And Zach and his team have done a really good job, democratizing access to this product that a few years ago generally was out of reach for most people, and they've really done a great job of providing a very valuable service at a very reasonable price. Hey Zach, I want to as we wrap up the show today, it's kind of my standard ending question, because look, business is a team sport, right? Like you need a lot of people have to work together to build a business, and for us as entrepreneurs, the people in our lives, in our network, that stepped up and did something kind for us. We didn't have to. That got us to where we are today. So my question to you is that, like, what's one of the kindest things that someone has done for you along this journey to get you to where you are today?
Oh gosh. I mean, there's like too many to mention. I can think of so many. I mean, a lot of people deciding to, especially in the early days of a company that I started, deciding to invest. There's, countless people there, countless people who have been, different versions of mentors to me throughout my career. The founders of RE Cost Seg. Before I joined this firm, I was in the crypto space most recently. Them pushing the "I believe" button on me as someone who could lead RE Cost Seg through, its next few chapters as CEO. Very thankful for that. So yeah, and then my wife for putting up with me through the good times and the hard times and everything in between. So there's a lot of people to thank. A lot of people to thank, man.
Well, yeah, no, that's right. And like, shout out to all the wives out there that, or just partners in general, that support their spouse on an entrepreneur journey. It is not easy. I started a short-term rental business with my wife, and now we have the STR like the best media business. And I would not be here today without her support and her guidance and us working together. And like, it really does take a village and a team to raise a family, to build a business. And our partners, through emotional, financial, just being, someone that you can kind of be full kimono on all your problems, and getting some real advice that's very tailored to you is special. So again, shout out to all the shout out to my wife, and shout out to all the partners out there that support their spouse in this journey. Well, look, folks, there you have it. STR Investors, like, Zach drops some serious knowledge that can literally save you six figures in taxes. If you're ready to stop leaving money on the table and start playing the tax game like pros, you need to connect with Zach and his team. So Zach, where can our listeners learn more about cost segregation and how RE Cost Seg can help them today?
I'd encourage you to check us out. Our website is recostseg.com. Maybe we can drop, I know you're a partner of ours, Michael. Maybe we can drop your link in the notes or something. Definitely let us know that you heard about us on STR like the best if you do come. Again, we offer free proposals, recostseg.com. My email is Zach, Z-A-C, at recostseg.com. You can also find us on Twitter. Our handle is at recostseg.com. We have a phone number on our website if you're someone that prefers to talk on the phone over sending emails or using a text software. So we're really accessible, and we'd love to hear from you.
Perfect. So I'll drop a link on how to reach Zach and his firm in the show notes here. And I highly encourage you to connect with Zach, connect with RE Cost Seg. They're a great resource in helping you kind of unravel the cost segregation, bonus depreciation puzzle. And they've been a great resource for me. And my hope is they will be for you as well. And folks, look, if you found value in today's episode, do me a favor, hit that subscribe button and leave a 5-star review and help another short-term rental investor level up their game. So until next time, I'm Michael Chang. And remember, work smarter, invest strategically, and build the financial future that you deserve. Thank you very much, Zach. I really appreciate your time tonight.
Thanks, Michael.
If you found this episode valuable, please make sure you hit the subscribe button so you can get notified when I put out new content on Airbnb investing. And if you want to learn about how to work with me more directly, I have links below on my description. Click on those and let's figure out how I can help you with your Airbnb investing journey.